please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Alright guys, let's hunt for value now. Today we focus on the NBFC space. Abhishek, what do you have for us?
Well, the stock on the radar, Sonia, is Shriram Transport Finance. The stock has fallen 10% from its 52-week high that it hit on 27th April. However, the CV cycle is on an uptrend and Shriram Transport is the market leader in the organized sector of used CV financing. Why did the stock fall? The stock fell on fears that an increase in load factors for commercial vehicles may impact their overall sales. There are also concerns that a move towards the IND AS based reporting of results may impacts its financial. Under IND AS, the incremental slippages of last 3 years, X of recovery expectations have to be written off from their net worth. So what are the triggers for revival? Well, in FY18, if you look at the overall CV sales, that was clocked in at 8.6 lakh units, surpassing the previous high of 8.1 lakh unit in FY12. So in the last 4 quarters also, CV sales have been pretty strong. You look at the growth from Q1 FY18 at -9%, it has moved up to about 31% in Q4 FY18. So apart from that, what are the triggers for the company overall? The quarterly disbursement in Q4 was at 15,000 crore rupees. So the disbursement to AUM ratio, that is how much of disbursement goes into AUM and the repayment, is at 2-year high of 35%. So if you analyze the disbursement of 15,000 crore, for FY19, that disbursement works out to about 60,500 crore. So if you take into account the disbursement to AUM ratio of 35%, it translates into an AUM growth of 22 to 23% for FY19. With the worst of asset quality woes behind the company, the management actually expects a 70 basis point decline in the credit cost. So while you factor in the return on assets, if you maintain FY19 at a statutory ratio of cost to income level, the ROA can improve based on the fact that credit costs will decline. The demand will also be driven in the rural centers. If you look over the last 1 year, they have opened 200 branches in the rural sector. Coming on to the brokerages, CLSA has a sell rating on the stock with a target price of 1,210, while Morgan Stanley has an overweight rating with a target price of 2,000 rupees. They also believe that they see an EPS CAGR of 52% over FY18 to 20. Motilal Oswal has a buy recommendation on the stock with a target price of 1,950, and they believe that the return ratios are just of cyclical ratio and the valuations are very good. If you look at the peer comparison in terms of valuation, Shriram Transport is below 40 to 45% of the valuation that is being for Cholamandalam investment. So Cholamandalam is actually trading at 4.3 FY19, while Shriram Transport is trading at 2.3 times FY19. This is not a stock recommendation, and let's listen in what the management has to say about their growth.
As of now, we are adequately capitalized because we have to maintain 15% CRAR, 10 plus 5, which we are above that. Overall CRAR at around 16.5. and Tier 1 is around 14.3. So we are reasonably, yes, but if you are planning for a big jump in the what call lending for next couple of years, we may have to look at raising some equity, which we will be taking call by the year end. Even though there was a pickup in the output, the basic consumption of the rural did not go up. First, in the previous years, in 2016, is because of demonetization. But subsequent to that, people got adjusted, and the cash is back, and people are able to transact and trade. So there is a reasonable good pick in consumption this year. We are planning to grow at around 18 to 20% on AUM basis overall.
All right, let's take a quick break. Up next, we have lots more lined up for you in terms of what you can expect from the OPEC meet. For now, here is some stock talk from the big bull, Rakesh Jhunjhunwala.
Markets have had a tremendous rise. I think we bottomed in August 2013 around 5,200 or 4,800. And you had the Nifty go to about 11,000, 11,300. I think we are now correcting. And if you look at the long rise that we have had, it's a very, very I would say it's a very poor correction, right? And I, for one, believe that, you know, bull markets cannot end at this level of GDP to profits, this level of profits to GDP. The flow of local money into markets, I think, is just the beginning. Abhi to khali trailer aaya hai. And I don't think this flow is going to stop. The index may have lost maybe 10% or 7-8%, but there has been tremendous correction in the mid-cap stocks, right? I don't think that political uncertainty is going to let these markets go down beyond a point. I personally feel it is too early to predict an election which is going to take place 11 months hence, right? And see, it's in the history of all democracies, bipoles by and large always go against the ruling party. So I think too much is being made of the fact that the BJP has lost the bipoles. The fact remains that Mr. Modi is the most towering leader this country has today. And I think in a range of 1 to 10, if he is 9, the second person is 3. So you will fight these central elections on the basis of an electable prime minister. I don't think the Congress or the opposition has got a credible, leader as a prime minister. Having said that, the fact is that the BJP did extremely well in the Hindi cow belt. To repeat that kind of performance may be difficult. But I am pretty sure myself, in all my calculations, that the next government is going to be a BJP government.
Welcome back here with Halftime Report, and well, all eyes now on the OPEC meet that's going to begin in Vienna at 1:30 this afternoon. And ahead of that, we've seen some bit of rise in the oil prices actually overnight. CNBC's Steve Sedgwick is on the ground in Vienna, and he sends us this report.
Iran seems to be the key here as well. Russia, Saudi Arabia are working very closely, and we've heard enough about this bromance at various levels between MBS and Putin, between Khalid al-Fallah and indeed Alexander Novak, and at various levels we understand institutional frameworks that a longer-term cooperation between Russia and Saudi, Russia and OPEC are taking place, and maybe we'll hear some more about that later on as well. But the fact of the matter is OPEC is divided amongst itself as well. There are all kinds of nuances, but of all of those, the key issue is, can Iran be brought along with the others and agree to some form of exit strategy, i.e. increasing production? Now, Iran doesn't have that many cards. This is a very important point, and a lot of the protagonists know that Iran doesn't have many cards, but one thing they can do is say, we are not going to agree to unanimity. We are not going to go along with this. And we thought earlier in the week, of course, and we'll get some tape in a second, that Iran wasn't on board. Then the last couple of days, we thought Iran was on board. And yesterday at events where he was invited to the Joint Ministerial Monitoring Committee, which is the second of 4 meetings we've got this week. I mean, it's just a crazy number of meetings, too many in many ways, actually. He came along and he stormed out after 1 hour saying it just wasn't working for him. We understand he held an off-the-record briefing late last night where he railed against the situation as well. So he doesn't have that many options today as well. We'll come to that in a few moments' time. Let's listen in, first of all, to the ministers we've been speaking about, because we have spoken to all of them, really. But I mean, I'll just give you a little sampling of some of the doorsteps I've been doing. And we start off with Bijan Zanganeh of Iran. And my question to him was, do you think, sir, there can be a deal? Listen in.
Every decision in OPEC needs the unanimity. I don't believe in this meeting we can reach agreement. And the important things, I would like to declare that OPEC is a independent organization and is not an American organization.
Oil and politics go hand in hand over the years. What this is doing, especially given the clamor by the U.S. president for prices to go down, the formation of the consumer body by India and China and the rest of them, is to bring them together on the table.
We will reach a decision that suits the market and suits the consumers.
We have been discussing the building blocks of this framework because the decision in December was that we should institutionalize this partnership, and it is a multilateral process.
I'm confident that we will reach some sort of good agreement.
All right, let's talk about some corporates now. Carborundum Universal is the stock in focus on the back of a Spark Capital note that came out where they did speak about growth levers for the company. Spark Capital does write in their note they've upgraded the stock from an add to a buy rating, and they also say that there's significant headroom drivers for growth and margin expansion across all three key segments. K. Srinivas, the MD of the company, joins us now to talk about that. Mr. Srinivas, good afternoon and thanks for joining us. Just tell us, between the three segments that you operate in, ceramics, electro minerals and abrasives, where do you see the highest scope of growth as we head into the next couple of years?
Yeah, good afternoon. Like you mentioned, out of the three segments, the abrasive segment is almost 70% India specific. Here the growth would be largely driven by increased consumption. The electro minerals segment is exactly the opposite. 75% is outside of India. Part of this is commoditized, and we are going through a big cycle of commodity prices going up. There is a shortage of material, and this is really driving up prices across this. We see a big growth coming on the electro mineral space as we speak. The ceramic space is more of co-creating products for customers. Here we work with customers who are on the cutting-edge technology, solid oxide fuel cells, smart grids, etc. Here the growth has been steady, but we are seeing higher traction on this simply because of the fact that we relocated one of the plants from Japan, and that's scaling up, so we are getting more volumes from that as well. So all three segments, strong growth, expecting clear 15% plus growth during this year, and this would go on for at least next 6 quarters.
Srinivasan, good afternoon, sir. This brokerage note actually goes on to forecast margins which are closer to about 90-odd%. Would you say that's an achievable target? How soon you can get there? I mean, what's the kind of headroom that you yourself foresee?
We believe that in the nearest term, in the quarters, we should get to about 16% EBIT margin. And I think that's what we have been giving as guidance. And it'll keep improving as the capacity utilization goes up. The capacities that have been created will take us to about 3,200 to 3,500 crores. And as we go towards it, the margins would certainly improve.
So, will you be looking to raise your capacity at any point in time? I mean, you do have surplus cash on your books, so will that be used for expansion of any of the verticals?
Yeah, we have announced a couple of capacity creation that's going on in coated abrasives in India. We're putting up some more new plants as well. And as we start investing, we will see how to take the company forward from the 3,200, 3,500 crores to about 5,000 in the next couple of years.
Okay. How are input prices been trending? Because I believe that in your electro mineral segment, you've seen a lot of improvement in realization. What's the trend now for FY19, you think?
The input price of all commodities have gone up. Our inputs have gone up. Consequently, our selling price have gone up. And I think this trend will continue at least for the next 6 quarters. We don't see any change in this. Energy prices going up. Almost all raw material prices are going up. And this trend will continue at least for the next 6 quarters.
Okay, all the best, Mr. Srinivasan. Thanks so much for joining us. That's Carborundum Universal. It was a big wealth creator in the past, a Murugappa Group company, so it has a good pedigree as well. And now that stock actually is doing quite well right now, up about 2-odd%. We'll take a short break on that note, but on the other side, well, our commodities editor Manisha Gupta is here with us. She has a long day ahead. She's tracking that big OPEC meeting. But Manisha, tell us what's been happening in the commodity space.
You know, Sonia, as far as it ends today, I'm happy with that. But there are chances that the OPEC and the Russia would meet tomorrow as well. And it might be spilled over until 4 p.m. tomorrow. So we are hoping that we do hear something today because the markets are very, very volatile. And as of now, the kind of surge back that you have seen come in for crude oil prices, that is because the markets do believe that there wouldn't be more than 500,000 barrels of an increase in supplies. Because remember, OPEC and Russia have been working very hard towards supporting the prices. And they started this back in January 2017. So they wouldn't want to let all of those efforts and market share go waste. With the global supply right now standing at 98 million barrels, 500,000 barrels of an increase in supplies that we can totally live with. And that is what the markets believe right now. Anything beyond 1 or 1.5 million barrels definitely will give a knee-jerk reaction. But then with the kind of demand growth that we are seeing globally from India as well, and the supply concerns from various countries, the geopolitical tensions, etc., all of that would continue to support the crude oil prices going forward as well. But that, of course, is in a few hours once we know what the OPEC members have been able to decide by the evening today. Himanshu Gupta of Karvi now joins us for more strategies there. Himanshu, hi. It's a tough day of trade as we await the final OPEC decision there. But how are you looking at the crude oil prices, and would you continue to hold your longs until the time we get to that OPEC press conference?
Good afternoon, Manisha. Well, absolutely, we have been facing this kind of consolidation from past two trading sessions as the meeting was getting closer. And today is absolutely when the markets are coming out with a lot of comments from the different ministers and from different nations. So talking about the levels, I believe that 45.50, 43.20 remains the trading range for a while till the time the outcome is out. However, I would like to reiterate one thing, that markets can turn volatile, and I would strongly recommend traders to trade with strict stop losses. Talking about the trading patterns and the strategy, I think there are signs that the markets are looking to go higher. We have seen prices declining from $73 after the prices made a high in the month of May, and we have seen the lower levels towards $64, $65 per barrel. I think we can see a pullback rally towards $68, $69 in case the OPEC and the Russia they settle for a production extension or and supply increase by 50,000 million barrels per day. So I think in that case we can see a recovery in the prices, and in Indian markets we can see prices recovering towards 46.50 and 48.50. But having said, I think markets can turn volatile also, so one should trade with a strict stop loss below 4,300 for a positional basis.
Himanshu, also, how are you looking at the metals as a sector? Because we did see some buying on the lower levels today. It, of course, is also quite choppy. There is constant pressure that we have seen come in for steel, copper, zinc in this week. Do you think it's a good time to start buying, or is that how we are ending this week as well?
Well, Manisha, absolutely. We have seen some sharp selling from higher levels in the metals. The sentiments have taken a hint. And absolutely, it's just a bargain hunting. And being Friday, we are seeing some positional squaring off as well. I think one should wait on the sidelines before going and building up fresh long positions. And let us wait for some more clarity on this trade tariffs, because today also we have seen European nations imposing some fresh import tariffs on American goods.
Yes.
And we have seen the demand also dampening from China. We have seen the markets for commodities like copper turning into surplus. So all this is not boding well for a very bullish scenario in the immediate short term for metals. So I think one can wait for a while from a positional perspective, but yes, from an intraday perspective, there would be some trading opportunities, of course. And for intraday, we would be recommending a short in copper around 456 for the targets of 450, and a stop loss above 459 would be recommended.
All right, Himanshu, Manisha, thanks very much for that. Let's wrap up on halftime report. Business Lunch will carry all the market action forward. Thanks for watching.